Hello, everybody. Welcome to the Midweek Strategy webinar with Jamie Setley. This is SB Trade Desk, of course. And let me know that you can hear me and that you can see. Good morning, Michael, Marco, Jeha. How are you? How's everyone doing? All right. We got a lot to get through today. Of course, FOMCs today. The last big, well, I guess you've got, BOJ and stuff coming up here too, but you've got really probably the last big, central bank meeting today. And market pricing odds had close to 98% for a hike a couple weeks ago, and I think that was down to about close to 80 yesterday. So I think everyone's thinking dovish hike, right? That's what they're talking about. But I guess the real risk would be actually if they didn't do anything. So market hasn't doing something, but the real risk would be if he didn't hike, and you'd probably see the dollar fall completely out of bed if that happened. All right, so let's start real quick with DXY and see where we are. We had talked at length for such a long time about this damn chart, and you all know what resistance, blah, 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 blah. I'm not going to continue to harp on that. We want to harp on where the breakdown level is. So how many times have we started to come off, and it's like, whoops, not yet, whoops, not yet, whoops, not yet. So with this chart, I think it's pretty clear where we are. We're sitting actually right now ahead of this FOMC meeting on a support level, okay? You can see the parallel lines here, all these supports, right? Little spikes below, spikes below, spikes below, but closing above each time we get down there, notably throughout June through August, and then since November to basically now. In fact, yesterday's low was right on it too. So where's the real break? Probably around 96, right? That's actually the November 20th low. Get below there, and we should probably be good for a bigger drop. You get down to here, you could have a bounce and get back to this level. If we rally post FOMC, I'd be looking for resistance at 97.40, which is daily reversal resistance. That's the high day close. Pointed this out in a note either last week. No, I guess it was in Sunday's post, I think, where DXY, made that little high, right? Euro did not go through its low, right? That non-confirmation, something we've seen a lot at turns, of course, and just something to be aware of. It that could have may very well could have been it. But bottom line here is 96. All right, so that's the level you want to know. I would throw these lines up on your chart so you can have them in real time, right? So just February low to the April 17th low, and then extend the parallel off the May 29th high. This is log scale. That's important to know. And then throw your 25 line, 75 line on there, and then the lines between those, okay? So you're going to want to have those today. All right. Want to look at a few things here on not just Euro, but some of the, we'll call it techamental, right? So like fundamental, but this is techamental. So this is a goodie from a long time ago. This is the German 10-year yield minus the US 10-year yield, right? Been this huge downtrend since 2008, and you've got a trend line here, all right? You had a little look below, and we turned back up here just recently. This has all happened in the last couple of weeks, and when we throw the Euro chart over this, it's not so much so Euro's in blue. It's not so much necessarily the direction as it is the turns, and specifically what I think is interesting is the trend line turn. So that first trend line hit right over here, that was actually the 2015 low, real panicky type low, right? The next trend line hit over here, that was another big low in the euro in December of 2016, and actually had one over here as well in July. And remember, we turned up in August, had a good bounce, and then failed again. And then we had this, seemingly breakdown in the yield spread, along with, of course, the euro breaking down below that 113 figure, and then we came back above. So you kind of have false breaks in both of them, the yield spread and the exchange rate, which to me sets up for a very interesting setup, right? Potential for the false breakdown and both just rocket higher off of this. So that's something that I kind of be aware of. Also just a reminder, like let's bring in, okay, so we've got our euro chart here. I want to just remind you of all the crazy divergent stuff going on. So you've got the 200-week average below price, and you see all these magenta dots, right? That means that we have divergence. People can look for divergence, but I prefer a little more mathematically inclined method, and we have it set with rules. So the rules are that you make a new 52-week low in price. The indicator does not make a 52-week low. And again, this is closing prices. That's important to note, right? The indicator does not make a 52-week low. And RSI has to be above 35 or below 65 to indicate that it's really petered out. Otherwise, you're just basically fading, a strong trend the whole time. So when's the last time we had anything like this? There's only one time. So again, 1, 2, 3, 4, 5 divergent readings over 6, 7, 8, over 8 weeks. All right. The only other time we had anything like this on the downturn, at least from, bullish divergence, if you will, was over here, where we had 4 readings over the course of 1, 2, 3, 4, 5, 6, 7 weeks. So 4 over 7, we now have 5 over 8. Okay. Obviously, this was a really big low in euro, and we ended up forming a big base, kind of an inverse head and shoulders, and we worked off of that. So one step at a time, of course, but I do want to, as we head into the, the meeting today, I just kind of want to be aware of this bigger picture setup, if you will. And of course, we've got the beautiful pitchfork here as well, right on the lower parallel. I mean, this whole thing is just textbook to me. It's just been quite the grind. And let's see if we can get a resolution to this by the end of the year, which is like 8 trading, not even 8 trading days left, I guess, because you've got Christmas and stuff next week. Ty says, are you long? I am long, Ty. I've been long for a long time, though. So, I have some euro exposure here. But we'll talk about the specific setup that I'm advocating as we get into the rest of this webinar. Ty says, DXY, is that the same divergence? Let's take a look. Yeah, pretty much. So you can see it here. You can see all those dots, right? We do have the setups as well, similar setups. And, the divergent stuff can persist for a long time, obviously, as we've, realized here in person. But when you look at it, oops, it's not just the divergence, it's the cluster of the readings. So like you can see all the clusters at some of the really big tops, right? Clusters over here, this is in the 90s, this is 93. Clusters over here in 1998, you had a cluster of 3 of them over here at the high. This was all the way back in 2001. Those are probably the biggest clusters, right? I mean, you had some over here in 2005, but not 3, right? We've got 3 here actually 4, sorry. So yeah, I mean, it's the cluster of the divergences that get my attention. All right. So 96 on DXY is the big breakdown level. Going into Euro itself, just tweeted out a chart. And if we go to a 4-hour chart here, we can say what's the right one to look at. Well, as far as slope's concerned, I had actually posted this one, right? Kind of ignoring this false break. I'm not sure that's the right thing to do when I think about it, because this actually seems a better slope to me, right? Like you've got the resistance up here on the 75 line. That's going to be right up here on 1460. So that's going to be a little pausing level potentially. And now you've got a little trend line breakout. Okay. So, maybe we trade 1460s and pull back. I mean, this could all happen over the course of FOMC, of course, but I'd be looking at 114 at this point for support. Okay. Very well-defined level across. You've actually got the NFP level, believe it or not, from 12.7. The high volume level is 1388. So that whole region, 1390 to say 114, would seem to be pretty important. Median line was resistance here a couple times, right? Last week, and then actually this week, yesterday. So this 114 spot looks to me like an ideal support. Again, we're not going on anything fundamental here. We're just looking at the chart and what's the price telling us. And to me, this 114 area is a pretty good looking level. So, am I going to be buying or suggesting to buy Euro right in front of FOMC? Not necessarily. Let's see. Let's let the day unfold a little bit and see what happens. But we say we get 1460s, pull back. I'd be buying that 114. I think you could probably even get away with a pretty tight stop. I mean, you want to give yourself a chance to work, especially with the potential for spikes and all that, with the event risk. But to be safe, probably give it a 13.55 stop or something, which is just below today's low. Okay. Upside level near term. And look, even if this is a really big low, it doesn't mean that we have to go straight up, right? It's still a process. Okay. We could trade up to say 115.30, which is all those old lows over here, right? Old support going back to May, really well defined there. We could trade up to the 1530s and pull back yet again, right? So Ty says the market's so cold, any real breakout would really go a long way combined with divergences. Absolutely, I think so too. But taking it day by day here it doesn't mean we have to be dreamy about it, right? So bottom line is 114, the area I'd be looking at. First target, be looking at 1530. So 114, 1355, talking 45 pips of risk, and you're looking at initially like 130 on the upside. So pretty good 3-to-1 there on the reward to risk on even an initial target. All right, so there is yay old euro. Okay, British pound. Not going to go too far in depth on this. I like euro better. I think we see that in even the euro pound price action, but you do have a short-term little uptrend potentially in the works here. And of course, short-term uptrends can turn into longer-term uptrends, right? So we dropped right this morning into 126.11, which is the weekly opening price. Frankly, that's where I'd be looking for support. If you came back down again during FOMC, I think you want to see support around that 126 figure. I'll leave it right there. Now, again, is this the right fork to follow? It's not bad. This is an hourly chart. This is short term, but median line was resistance. He kind of rode along the 25 line for a while. I would just be aware of essentially 126 maybe this is the pound, so as we know, it tends to, right when you think you get a turn, it goes and washes you out and then turns up again. So I would pay attention to 126, okay? This is right there during FOMC, that trend line. All right, so 126. I don't really plan on trading this today. I do think that Euro is a better setup and a better opportunity than the British pound, but I do want to let you know. All right, dollar yen. Took a long last night, really tight risk, was stopped out in about 10 seconds. Just thought maybe if we get an overnight bounce back up into the 12, 90, 13 region, it'd be, it's worth a little shot, but no biggie. What now? Look, from a pattern perspective, what's this? A triangle? This is A, B, at this point, we're starting to break below. So at this point, maybe we don't have a bullish triangle, but I'm not giving up on it just yet. I would say that 1190 is an area to watch for a little bounce for support in dollar yen. Probably more likely for me to be looking on the upside in euro yen, which we'll get to. Therefore, I think euro is still the better trade than say dollar yen on the short side. But this is your spot here, 111.90. Let's go a little shorter term. Go to a 4-hour chart. If you do get a reaction higher off of this, then I would be looking at resistance up here, which is around 113.0 or 113.10, excuse me. Okay, so we're just kind of mapping out some levels here. If we do get a decent breakdown and you start to come back a little bit, this median line could provide some resistance, although hasn't really been all that precise in terms of being, support or resistance at all. So I wouldn't really pay attention to that too much. Again, euro is probably the better setup. But yeah, 111.90, pay attention to that today for possible support. Okay, dollar CAD, I want to take a step back on this, on dollar CAD here. So all right, this is a weekly chart. Something struck me when I was looking at this yesterday. This longer term weekly chart. So we're just looking at the trend line here, extending the channel off of the high back into the Jan 2016 high. And when you look back at this, I noticed that your parallels within it are really quite clean, right? So, dollar CAD itself, kind of this choppy uptrend and what have you, I do think you're going to get some resistance up here. I'm not sure if it's going to be as high as 137 or not, but this is more for kind of, thinking out towards maybe a bigger trade next year, okay? The sentiment on CAD's really low, right? So it means really high on dollar CAD. But at some point, this 130.60 area could be really, really, really important, right? And if we look back on this, when's the last time you had kind of a 3-wave drop like this on a grander scale? I was looking back to this period, and look how the similarities between, how it's kind of riding on the 200-week average here. Very similar. very similar here in how this is working. So maybe you go a little higher here in dollar CAD, and then we get a pullback at some point next year, maybe into the first couple months of the year, and then you have a much bigger trade on the upside. But very similar. You had a high in January of 1995, high in January of 2016. The eventual low was in November. The eventual low over here was in September. So just, a couple months off. But even since then, you can kind of see the progression is similar, right? You're kind of stair stepping higher, right? 1, 2, 1, 2, right? Same here, 1, 2, 1, 2, right? And then another big run and then a pullback. Everyone thinks it's over because they count 5 up. You get a pullback and then it goes absolutely ballistic. So something to keep in mind here as we head into the rest of the year or into the new year, excuse me. But in terms of dollar CAD, where I think you can probably get a pullback, I would be looking, not too far above. I mean, we can throw on our short-term fork that we've been looking at as well. Got this one. Right, this is log scale. A better one to look at is probably going to be this one. So getting awfully close there, throw a parallel off of this high here, and maybe you actually get bigger exhaustion up into 36.50, okay? So I don't think there's anything to do here. I could very well see dollar CAD pulling back more initially, or I could see us going into more of a blow off, and then you'd actually want to be shorting that blowout. So something to think about, bigger picture, maybe coming into a top here in dollar CAD, get a pullback early next year, and then we take it higher. Next move for me, given this extended move on the upside, is probably going to be on the short side, though. I'm just not sure if it's closer to here or closer to this 37 area and that resistance up here from May of 2017. Okay. Get that whole area though, right up here, right between like 136 and close to 138. Okay, Kiwi. Just keep it simple here on the short-term charts, okay? We are looking at maybe completing a little impulse on the upside here. You've got resistance up around 68.80 to 68.90. That's just this parallel, okay? And support at this point, I think, is going to be down around 68.15. I would be willing to buy Kiwi on a drop. So there's kind of a couple trades heading into FOMC today and frankly the rest of the week that I think are interesting, and that is Euro on the upside, assuming that we get the right reaction, right? And maybe looking for that 114 support, and then Kiwi and maybe looking for that 68.15 support, okay? And as I mentioned yesterday in the note, it does not mean that I'm long and I'm looking for this huge move to the upside by any means, right? I'm just kind of thinking that we're in a tight coil here. You did have a big run from October and you have a nice pullback, 3 waves, but it is relatively shallow, right? So, it's not even a 38.2. So we have to work that off in time or price. And if we work it off in time, you could see us, 3 down, maybe trade 3 up, maybe trade another 3 down. You get a flat in which you go back down here. You get a triangle in which you go sideways in a coiling manner. None of that really matters right now. What matters is that we are looking at 68.15 for a long. I will say that this low over here from last week, last Friday, is really important. That 67.78 low is critical because if you were to break that, you would actually have head and shoulders top, right? and then you'd really have to switch it up, and frankly, you'd be looking a lot lower at that point. Next immediate spot would be 67.30, but that head and shoulders top would have more of a a target much lower. So we're not there yet, of course. We'll discuss it if we need to, but 68.15 looking for a buy there. Okay. Aussie a bit weaker, similar to how I prefer euro over pound at this point. I think I prefer Kiwi over Aussie at this point, right? I mean, Aussie's at support, but it hasn't reacted nearly as well as Kiwi has. Okay, and we can see that when we look at the Aussie Kiwi chart as well. So I actually had that chart on when I first started the webinar. But we're at support, fine. I wouldn't be shorting here, but that doesn't mean you have to buy it either. So I'm not going to spend too much time here. If we were to get a quick break to the downside, I would pay attention to like 71.10 as a level. Although you can step back on this Aussie chart and you can see it's a pretty big spot, right? Look at those lows over here, May 2016, December 2016. A possible strong head and shoulders bottom. I say strong because you got a higher neckline and a higher right shoulder, but that is just a possibility at this point, right? We need to see something from it first. So, if I go back to this chart, let's say 60-minute, let's say if we were to get a better move on the upside and come out of this, right, then we could actually form ourselves a nice little base. So again, this is about being nimble, not trying to predict the next move, but instead really trying to think about the possibilities at this point, because that longer term chart I showed you, I think it shows how critical the low is down here, being the May 2016 and December 2016 lows. Okay. So if we were to turn up, get a nice move off of this low, then you can look to buy a dip. Until then, I'd stick with Kiwi. Okay, I've got some other FX charts I want to get into before I go to some indices and commodities and all that good stuff. Dollar Mexican peso is pretty interesting here. All right, log scale channel from the 2008 low. The whole thing channels, okay? You've got a pretty nice impulsive decline, a pretty obvious three-wave rally, another drop, another rally, and you've got a downtrend line, okay? And look where we failed since November on this downtrend line, okay? With the kind of a rounding top of sorts. You can call it a head and shoulders top if you want. Really, your big level here for the break is simply this trend line. But an interesting setup nonetheless when you look at dollar Mexican peso. Dollar CNH. This is a very important chart. You can actually draw a channel now going all the way back to the 2014 low. All right, you draw that channel, look at the center line. You want to know when the stock market and the equity markets and the trade war stuff goes away, you probably need to break below this median line. Look what's happened each time we've dropped into it. Support, higher, right? Risk off. Support, right? December 4th, higher, risk off. So this is a key level. You drop below this and you're probably going to have a pretty good short covering rally in the indices, or maybe even a really big rally up until the 200-day average in dollar CNH. So I would pay attention to this chart, or at least know where dollar CNH is trading. offshore one. Essentially, you want to know that low from December 4th. You break below that 682.60, then it's kind of all systems go, I think, for not just dollar weakness, but probably upside in equities too. Aussie Kiwi. This one's kind of tricky because you've got, here's this trend line that you just broke and tested it, right? Looks like death, like it wants to just get obliterated on the downside. However, you pull up a weekly chart. I mean, you are trading at just like extremely long-term support. Okay, so Aussie Kiwi, this is, you know, if this breaks for real, watch out. The alternative, of course, is you go back above the trend line, you get a false break. But as of now, we have to go on what we know, and we know that Aussie Kiwi has broken a trend line, a well-defined one at that, 3-year trend line, 3+ year trend line, 3.5-year trend line, and that's, you know, that's a big deal. So that is not something that would be under the category of being extremely bullish. Again, another reason why at this point I do favor trading Kiwi on the upside rather than Aussie on the upside. And that could be where you're going. Could be going for a test of these lows down here. Euro yen. Ties got euro yen. That was actually the next one on my list. An upside move in euro yen might be one of the more surprising possibilities going into year end in the beginning of next year, right? So here we are looking at simply our channel all the way back to Brexit. Okay, beautiful center line, pretty damn beautiful. Okay, this parallel simply off of this low here, this low here. Well, that's where the low from yesterday is too. Excuse me. Sorry, I just went through a little coughing fit. Sorry, hold on one second. Let me get a sip of water. Excuse me. All right. So here with euro yen, again, I don't know if we just made the low or not. We want to see a little more evidence of that because you still, I guess, could come down and test this, you know, 127 area, which is a square root level. Been important all year. We're going to get more square root levels, of course, as we get into the next year. But you know, you just simplify things and look at this, excuse me, as an uptrend, right? An uptrend, and you're essentially looking to buy the uptrend support, which is kind of now. I mean, this is the 200-week average. It's a lot like euro dollar, by the way, right? Sitting on the 200-week average. Ty says, looking at the chart, how do you get it? How do you get in? Oh, so how's the trade set up here? Yeah. So over time, as I've evolved as a trader, I've become much less concerned about getting the exact low and, you know, waiting for more evidence and then getting in. So to answer your question, Ty, there's a couple things here that I would look at. One, little launching pattern possibility. So let's say we trade up to 128.60, right? Right up here. It's a 4-hour 200 average. and of course this high up here from the 17th. If you trade up there, then you'd be looking to buy a pullback probably into around 28.20 where you are right now, right? Because at that point, you'd have at least the potential for a little inverse head and shoulders really short term. Until then, you still have to respect the potential for one last drop to 127, okay? That is how I would approach this in terms of a possible entry, all right? It is a beautiful looking chart though, isn't it? So yeah, that's a good one. And I mean, let's think about it, right? Like, I mean, how many people would just be shocked if euro yen took off like a bat out of hell from here? I mean, that doesn't seem to be probably on many people's radars. Like Europe's a complete disaster. Um, we talked about this a lot last week, but the stuff isn't supposed to like make the most logical sense, right? Like, oh, Europe bad, short euro, right? Europe good, buy euro, right? A lot of times it's when things are the worst when you get a big move on the upside. Ty says risk off from the Fed is in the picture, higher euro and lower yen. Yeah, I mean, I think euro dollar on the upside is a better trade, but this is a setup in its own right. And again, let's wait and see if we can build a little base on this euro yen chart, right? Get 128.60 and then pull back and buy near 128. So, real quick, okay, FOMC, okay. Do have some Aussie employment data tonight. That's important to know. But the other thing, of course, is BOJ, right? So that's going to be, I believe, tonight, right? Thursday in Japan, but that's tonight. So going into tomorrow morning. So that is something to consider as well. Maybe BOJ does something crazy. I don't know. There's certainly the potential there. And also something I do not want to forget to mention. So we did get a DeMark buy on euro yen here, right? We got a 13 count. Previous 13 counts on the buy side, you had one over here, right? Got a quick 400 points up. You had a really good one over here back in April 2015, and you had just a rocket ship of a 1,300 point rally. You had one back here in 2012, right? Big move up. You did go to a new low. You get the idea. We have the setup. We have the uptrend channel, and we have the DeMark countdown, and we have the potential for simply a shocker move that kind of no one is probably thinking of. So we have all of that. All right. Let's go to some markets, some S&Ps, and et cetera, et cetera. All right, so this is the S&P chart that you're familiar with, right? So the first place for us to probably get a real bounce is going to be, well, that median line, which is where we are, and we are bouncing from it. Remains to be seen what kind of a bounce we get. It helps to have the other indices, and understand their levels. And I think the Dow chart from yesterday is exceptionally important, right? We go back to that Dow chart, that makes it clear where resistance is. Like 2627 is probably a good level for resistance in the S&P 500. It just was big support, like for end of October and into December. However, it's not as clean as this longer term Dow chart. Right, so here's that longer term Dow chart to give you an idea of how important this level is. Right, this is where we found support once we broke. It really was kind of like the beginning of the financial crisis over here. Not saying that's going to happen again, but here we are now. So go to the daily chart. You can see us bouncing, lower channel. You get back up there, clear as day, 24,400-ish is going to be your critical level for resistance, okay? So, yeah, tied. Charts are screaming dovish resolution to the Fed, right? So Fed comes out, this thing rips, 800 points into here, right? And then I actually think it's a short again. At least that's where I'd be looking. So you want to know 24,400 on the Dow, and then probably get bearish again, right? Probably 26, 27 S&Ps, something like that. And with the NASDAQ, it's less clear to me on the NASDAQ, but I want to put this on here because this is good. Hold on. All right. See that 68.20? Here's the symmetry concept. So this is the 25 line here. Eventually, you're probably going down to this 75 line, which is going to be 61.90 near the February lows. But in the meantime, we are seemingly bouncing between the line between the 25 median line, the line between the 75 median line, right? So see support here, support here. I would call the median line up here kind of 66.13, which is, another 80 S&P points, 90 S&P points, NASDAQ points, excuse me. So yeah, you saw some good upside there. But really the big level is up here, 68.19. So that would be another 300, 290 NASDAQ points, right? That would also be up pretty, if we did it over the next day or so, which again, in this market cannot be much of a shock given just the extreme bearishness that's so pervasive right now, right? You need a market clearing rally in order for this to work out on the downside at some point. That 68.19 area would be up on that 4-hour average too, 4-hour 200 average. Okay. So really good levels there to pay attention to heading into this important event that we have later today. And we will be armed and ready. All right, let's look at crude oil. Holy smokes. If crude doesn't find support here, it's in some deep, deep trouble, right? Like really, really deep trouble. When we look at the center line, notably back to, I'd say back to 2000, but maybe, sure, could you dip a little bit below it like we did over here, I guess. But I want to see this line up here. This is the 75 line. See how that's resistance? Did the same thing over here in 2015. Spike below. That was resistance. That was resistance. That was resistance. You get the idea. So my point being is that 56 is probably going to be resistance, right? in crude oil. Do we go there right from here? That I do not know. We'd have to wait for a setup. I was totally wrong on looking for a crude oil low before we got to this area, and that is my fault, but it happens. So I guess if we got a little more spill, you could say that maybe 43.70 would be an area. Got a bunch of spike lows on that chart there too. But as it is now, we are trying to bounce off of this. So, you know, where would I actually get kind to crude again? I would say get up through these, get up through that 50 area, right? There's old support. Get up through 50, and then you've got to run towards 56, okay? Gold still stair-stepping higher. You're going to, we did come into this median line, overshot it by a couple bucks, but it was support. You know, you'd still look for it to be support if you came all the way back to it again. Again, the really major level to pay attention to is coming up is this high up here. Okay, that's the July 9th high, and that's going to be more or less in line with the upper channel line near 1265. So 1263 to 1266 is your range to pay attention to in gold. You know, my bet would be that you probably pull off there a little bit. At the same time, if you're shorting, you need to be pretty tight on the stop, because if you go through that, then you're in impulsive mode, and your next levels are probably 1310 plus, okay? But would be looking for a pullback off of that 1263, 1265 area. You know, or you don't have to do anything, and you can just actually just look to buy supports within the uptrend, right? Ooh, getting a nice little pop here. This is an hourly S&P chart. You can see that we've got a pretty good short-term structure to look at here. So good one to know as you head into FOMC. Ty says clean 5 waves question mark. Ty, which chart are you referring to? Are you referring to gold or the S&P? Gold. Yeah, so 5 waves off of this right here, right? 1, 2, 3, 4, 5. Yeah. So again, that's another reason to suspect that maybe you get pulled back from 1263, 1265. Going back to our S&P chart, remember we had 2627 as a level? Well, guess what? On the S&P futures, that's the 200-hour average too, right up here. So if you could, you know, get up out of here, maybe get a spike up into this region, you know, would be. I'm in some calls that I bought. I tweeted out the other day that I was no longer short right here. Now I have calls, and they're either going to work great because they expire on the 31st, or they're not going to work at all. But I like the idea, right? All the levels we've mapped out here over the last week or so. Okay, I have gone through all I've got to go through, and through a lot of charts today. Looked at some stuff that we usually don't look at, which is always fun, right? Dollar MEX, dollar renminbi, offshore yuan, Aussie Kiwi, Euro Yen, all the majors, indices, gold, crude, and Why don't we look at the yield ahead of, let's look at 10-year yield ahead of FOMC. All right. Trend line from 81, okay? But here's the fun part. You've got this fork, this pitchfork, and eventually your big support is probably this parallel. It was support in September. So we should probably look at it to be support again, right? So that's going to be down near 250 at some point. And that goes hand in hand with the bond market, of course, right? This is TLT. But here is the bonds, 30-year bonds. And we do have the potential for a pretty massive move here because we are over the median line, right? So you could back and fill a little bit, as tends to happen around these median lines, but eventually you get a big move off of them. So, you know, a great example, of course, is back here in January, right? Over here in August. But now we've gone through it. So if we did back and fill, you'd be looking for support in this around 143.10. Ty says, it's been 3 years, Mark, since we saw the market ease during a Fed hike. The market ease, so you mean like the bonds and whatnot? Like rates come off? I mean, the reaction, you know, in yield and stuff, it's not just like market, you know, they hike and yields go up and they don't, you know, they cut and yields go down, right? The long end's is more removed, right? So the short end is what the Fed controls. Long end is inflation expectations, but that's obviously got to take a huge hit because of what happened to oil here. And if they reference that, you might see the long end yields go down and this bond market go up a lot. Oh yeah, Ty says, yeah, they hiked and rates crumbled. I remember it. Yeah, absolutely. Yeah, so yeah, we're on the same page. Okay, lots of awesome charts here today, if I say so myself. A lot of good stuff. So I'm going to leave it there. And thank you all so much for joining me, as always. I'm not sure what the schedule is going to be like next week yet. I got to talk to Mike. Obviously, being Christmas week, might not do a midweek webinar. I'm not sure yet. You know, maybe I try to do something a little more educational. We'll see. But markets will be moving, so we'll have our reports and stuff, of course. But I'm not sure about the webinar schedule just yet. Okay. All right. So thanks again for your time. Again, we've got 2 hours till FOMC, so go get a snack and some water and or a soda and get ready. Maybe some popcorn too. All right. Take care. Talk to you guys later. Bye. Merry Christmas to you too, Ty. Happy holidays, Jeha. Thank you.